Welcome to the Pulse Check podcast. Silvio Struebi, good to have you on board, partner at Simon-Kucher. Thank you for joining us.
Thank you, Salomon. Thanks for having me today.
And as you probably already know, as usual, I start with a bit of an icebreaker to get into the flow. So tell us a bit about yourself, something unique, something that makes you you.
Yeah, so I think this... Here I always ask my wife, in essence, what's unique, right? And she came up with, Silvio, I mean, you are truly Swiss, right? So, okay, and I said, tell me more, right? And she said, look, you have this sense for perfection, for excellence. And I say, yes, these are definitively Swiss qualities. But then I also thought, I'm now in Asia for quite a while, right? And for me, the major learning that I have is that I had to unlearn things, right, since I'm here. And I think this time has been personally very, very enriching, right? So because I think I'm having the Swiss qualities and having worked in Asia across many jurisdictions, right, make me a little bit, I would say, a more well-rounded personality. I mean, this term global citizen is a big word, but I believe I have benefited really a lot from that personally, but of course also my clients, because I can transfer knowledge. And what's maybe not unique, a hobby, is I'm really a passionate cook. So let's say Zurich schnetzels with a touch of Sichuan chili and light flavor of lemongrass. So, well, bringing together, let's say, the best qualities as much as possible.
Great. So looking forward to once maybe come over for a
good
with dinner.
With pleasure, yes.
Yeah, I mean, what I definitely can confirm, having worked with you now since a couple of years, is that perfection, the Swiss quality that people also appreciate in Asia. And brings me probably a bit to the topic of today. You're definitely also the expert in pricing, product and services pricing, and there for sure there is a certain maybe also Swiss element to it.
Absolutely.
We pay not only for the actual good meal in a restaurant, but also for the service,
right?
Experience,
everything
exactly.
Around, yes.
While here in Asia, that's not always the case. I think you've also experienced probably that in a Chinese restaurant, it's much more about the food than maybe about the service. Sometimes also our clients, joint clients we have, they ask more for actually really buying a product and output and really paying for the service. That's something we sometimes experience. So maybe we can start a bit in your own personal experience, pricing. How do you also see how it compares banking, financial services, maybe to other industries? Are there some key differences you see as something that is maybe also lacking in banking?
So maybe first, I think when I just generally banks, I think when it comes to pricing, they are not the best, right? And also the effectiveness of how they do pricing, how they implement their strategy, that they vary greatly. And what is maybe a bit different is that, and here also can draw a little bit parallels between maybe Europe, US and Asia. It's pricing is often rather a new concept for many banks, right? The type of price management work that we do, and it's not really seen as what I call a critical lever of growth, a critical lever for revenue generation, right? And that's why it's often not prioritized. And when we look into other industries, I think one of the big differences between banks and, let's say, take a manufacturing company, etc., is the element of cost, right? When you look at the products in a bank, I exclude now loans, because there is definitely cost of capital and others. Just take a bond trading, fund trading, these things. The cost element is often not considered when the bank defines pricing strategies. Also, when an RM grants discounts, and I think this is one of the elements that stands out. It's more a benchmark-driven pricing, right? In recent years, I think a lot of banks they they caught up on the analytical aspect of pricing. I can also elaborate later on, but I think this is one of the key differences, because when you know that you need a certain, let's say, margin to be break even, right? This has a different implication on how you go out and price products and services.
One element that comes up to me as well is the price transparency, right? Which was a big topic here, also led by the regulators, HKMA, SFC, as well as MS in Singapore. Now, of course, banks have to be much more transparent in terms of, for example, also costs of research, as you said. How do you come up with a price? Is it based on cost or just random? And then also how discounts are applied and so on. And brings me maybe to the fundamental root causes first of why maybe banks are not as mature in pricing, and then maybe you can also elaborate in terms of how actually banks do manage pricing today in the region.
So I think the business priority strategy, right? When we look into, just the AUM growth of banks in the last 5 to 10 years, it was all about, driving volume, driving AUM, etc. And that has it's more a growth mindset and less a profitability mindset, right? And I think it's more that, so over the recent years, right, definitely also in Hong Kong, Singapore, the markets are maturing a lot, right? Growth rates also slowed down a little bit, also driven by the topics you mentioned with HKMA and MIS, with all these regulatory reviews. Banks are more focusing on the topic right now, and I think this has been probably in the last 3 to 4 years the main priorities for banks is addressing the regulatory topics, addressing the risk topics, right? But most of it, I would say, is now concluded, and now, given that I think the growth rates are no more what they were in before, right? That let's say that the commercial side of pricing will be more important in the future.
And maybe then also towards the shrinking margins, as you said before, when it was all about growth and less about costs. Now we hear the biggest banks, including publicly HSBC, pushing towards cost optimization. What levers, options do then banks have when it comes to pricing to increase margin? Is it only about, on the other end, to optimize your costs, or are there ways that banks can actually increase their commissions, their fees?
Absolutely. I mean, when you look at it, I think there are two aspects to pricing. There's let's say the headline price, the standard price. It's one element to it, and then, of course, especially in, let's say, B2B, also private banking and the discount management. So I think these two levers should be optimized together in parallel. And I think one element to it is when you look at pricing is always price differentiation, because just one price usually fits none. Right? It's also not in line with how banks deliver services. So there we always say, ideally we have a well-differentiated product proposition, and then also below a well-differentiated landscape where clients then can choose the service levels they want to consume, and then of course based on it should have different price to account for cost to serve. So these two levers, so the standard price, so that's the setup, the framework. But then I think here in wealth management, discount management is absolutely paramount, right? How discounts are granted, and there are many elements to it. There is the escalation thresholds that banks typically have. So when do you need to ask for an approval? Then the whole topic about processes, right? A lot of banks, when you look at the discount process, is Excel based, is manual, right? And therefore there's a lot of leakage happening, technical leakage along the process. And overall, what I observed that the whole price management is probably more done in an ad hoc manner, more reactive. So banks are mainly responding when there's a regulatory topic or when there's a competitor move. but it's not seen as a strategic priority they actively manage, right, and grow. So I think this is the element to it. And when you mentioned cost, I mean, pricing is also a lever to drive, for example, customers in the right proposition, right? So I mean, some banks here they have differentiated fee schedules, for example, for online channels, where, for example, then the commissions and spreads are lower because of the self-servicing element. And then quite often here the big topic for banks is at the beginning, yes, the prices are lower, so probably also the revenue per customer is lower, but the costs are also significantly lower. So when we go online, I think this needs a holistic new strategy, but also needs new KPIs and new incentive models, right, for the front office representatives. And I think what's interesting about pricing as well is when you work with pricing, that the revenue impacts can be achieved relatively fast. While when banks work on the cost side, that usually takes longer to materialize, right, these effects. And what I'm always trying to tell my clients, it all starts with transparency, right? That also an RM, for example, knows what is the impact when I grant the discount. That when you are an approver, let's say market head or a business unit head, that you know how much leakage is happening across the different product categories. Because without having that transparency, it's hard to steer a sales force in the right direction.
One element that you just bring up is, for me, if you look at other industries, for example, traveling, right? If you travel more, you can yourself also choose to upgrade. You become maybe a frequent traveler. You have maybe certain freebies and better prices. But no matter what, you can decide, okay, I fly now economy or business class or first class, as long as you bring the money. And
exactly. Then you get access to the service.
Exactly. And the same also with other industries, like when you buy a car, no one would tell you cannot buy a Ferrari, like as long as you can pay. In banking, it feels like when it comes to pricing and certain service levels, it's always immediately across the segmentation. So you are, with your earnings, with your salary, you are not qualifying to get different access, especially then also when it comes to us as global citizens, as you said before. We have a lot of FX transactions.
Correct.
And we do a lot of FX transactions and should be maybe also treated differently than others who are not doing it, not because we bring more money overall, more AUM to the bank, but maybe also in terms of what services we ask, and pricing should be adjusted to also the service level we may ask for, and not just, I mean, how rich are we?
Exactly.
How do you see such concepts being applied?
So we call that in my pricing jargon a bit the good, better, best approach, right? So that you have these both value or service differentiation and pricing differentiation at the same time. I think when we look into, let's say, Switzerland or Germany, there I think that the product proposition of banks is far way more differentiated than in Asia. So here the banks work more with different tiers, what you mentioned, right? Then you get a credit card, a bit more red carpet based on AUM and not based on, let's say, price points or service decisions, especially among the basic products. And then I think a second element to it, when we just look into discounting, the differentiation, discount management is usually happening in a very unstructured way. So to give you a sense, roughly, I would say in wealth management, let's say 70% of the customers have a discount overall. But when you look into different asset classes, right, for example, the bit more competitive ones, then it's even more, right, 50 or 60%. And when we do the analysis about it, it's quite interesting to what is the root cause of discounting. And, you can do the statistical analysis, and I would say more than 40% of the discounts cannot be logically explained. They simply determine on the RM, on his or her ability to articulate the value for the service, right? Or sometimes we also hear when we talk to these people. So I used to price like this. So quite often that the pricing practices that an individual, acquires a relationship manager over time, they come from where they started their career.
Yeah.
Right? So it's not really reflected. And I think here what we always try to do on the discount management side to bring in a little bit more structure. What you also mentioned, so that we, for example, see a little bit a trend, so that we can explain it, right? Let's say the bigger the client, of course, the deeper the discounts. The more activity, the more the discounts. And then, of course, there are many differences. So different markets have different, whenever you have a cross-border business element, then a wealth manager is also a bit competing with the onshore banks. And that also drives the price perception of the customer. And such elements we try to bring in as a form of, we call it sometimes recommendation or guidance, right? To give an RM a sense what would be a good price for a given customer with a certain service consumption. That is just a bit more in line, that's not fully, let's say, random. But yeah, it comes back to what you initially mentioned, right? To come up with a clearly structured service proposition, a clearly structured pricing architecture below, also discount architecture below. That is then the fundament, right, for the RMs and the banks to act upon. And here I think also when competition will grow, naturally the incumbent banks will be forced to come up with a bit more differentiated, services, because they need to compete on the lower end. You have challenger banks, a lot here in Hong Kong, a lot in Singapore, right? Thailand is now also on the list of the digital banking hype, and I think this will also change a little bit how banks think about servicing. And the more they invest in digital channels, the more self-servicing, naturally new revenue models need to come up.
That's another interesting example. If a virtual bank starts new from today in Thailand or Hong Kong, of course Hong Kong we have now gone through that cycle, but if you would say, hey, the top 3 to 5 success factors, how do we need to approach pricing? If you have I know most banks have a legacy, they cannot just change pricing as simple, but if you start from zero today, how should they approach this? I
think in the first, let's say, 2 to 3 years is all about growth, right? And their pricing can be used as a lever to acquire customers. But then after, let's say, year 3, if the bank is not on a good way towards break even, then the problems will definitely come up. And when you look also at the definition of these papers that the HKMA and other regulators issued, that path to profitability is a clear requirement, right? And then inevitably they need to come up with more services, right? Because customers simply don't pay more for less, so they need to come up with a more refined value proposition for which clients are then willing to pay for. And typically it starts with, let's say, more the CASA type of products, right? Payments, accounts, these type of things. And the more they over time they launch then loans, maybe insurance products, maybe even investments, depending on the jurisdiction where naturally they can earn a little bit more money. So I think that 3 to 5 years is probably a reasonable time frame. And I think the whole digital banking, when you think in a couple of years from now, they will have also a differentiated proposition similar to incumbent banks, right? Inevitably, if you want to make money as a digital bank, it's about high margin products they need to offer to customers. Maybe they can offer it in a different way, with a different logic, with a different experience, right? These are then USPs they can also monetize, so the overall experience. But I think in essence is the product, right, that customers need.
And the products are always the same in the end in banking. And maybe an anecdote is for me tailoring. I mean, wearing my red suit here, so tailored in Thailand. I always say there's mainly 2 cost aspects to a tailored suit. One is the fabric, which of course has a difference of an Italian fabric maybe versus other countries, and I'm not comparing now which country has the best fabrics, but There is difference in fabric quality, absolutely right, and you pay for different quality of fabric. The second element is the differentiation in terms of course, also the tailoring and the service provided. So if the tailor also really reads you well and helps you to actually find what you're really comfortable in terms of then also measures and then also the style and so on. And I have to say my Bangkok tailor is meanwhile doing a good job to identify my favorite colors and so on. So you pay for those two aspects. And in banking, it would be for me a similar way to look at it. I mean, if I want to buy an ETF has to be low cost. It just comes with the product, and I know exactly what I pay when I go to interactive brokers or when I go to a bank, and I don't want to just pay 100 basis points more for the same product without having then anything in addition. So there has to be a different maybe service packed on top in terms of advising me to choose maybe which ETF I should buy. Then I might be willing to pay more. Otherwise, I just go to interactive brokers myself.
Absolutely. And I think this is the fundamental problem of the bank. You provide advice, good service, but then you don't monetize the advice, you monetize the trade execution.
Yeah, exactly.
So actually, in essence, customers pay for something else. And here maybe an example. When you look at banks, right? So I think just the revenue mix, I mean, we've worked with many, they are fundamentally different. How they earn money, with which product. So it's not one bank is exactly the same. Right, so because every bank has different capabilities, different market access, different service levels. So that's just the bank in itself. And then also when you run analysis on an RM book level, you see systematic differences, right? How they also price themselves, right? There are those that are very active as they provide these high-touch solutions for clients, are very close to their clients, right? They often have then a completely different price realization than, let's say, maybe an RM that inherited most of the relationships and still needs to know the customers, right, to bring out his or her value proposition. And
on that element, I mean, when it comes also maybe to incentive structures of an RM, that also plays into, I mean, is he incentivized to just push products to the client or maybe provide a more holistic service value? What do you see happening there, trends? And of course, there's the regulator pushing certain elements, but what are the banks doing there?
So I think scorecards have evolved a fair bit, right? So I mean, you typically have AUM and so net new assets as an element to it, but you also have revenue generation as a criteria. So these are more the financial. Then you also have recently, I would say in the last few years, more and more non-financial incentives, right? So that, I mean, all the, let's say the KYC, all the alerts that everything is in order in the book. So these all influences then the variable compensation of the bank. But I think, I mean, this may be maybe in the future, but concepts like MPS, customer satisfaction, a bit more what we maybe see in other industries, they are not so evident in banking. And I think maybe in the near future that could be something to think about, right? How to incorporate really these a bit more softer KPIs into the overall compensation.
Yeah, and I mean, again, also from personal experience, when I see that the bank always tries to push the same products to me, that feedback is definitely not positive. And brings me maybe also a bit to the more technical capabilities of what banks have. You mentioned before pricing, platform software, maybe also dynamic pricing that is becoming a hot topic. Can you explain more?
Absolutely. I mean, this is also a bit how the work, my work has evolved over the years, right? So at the beginning it was more, let's say, the traditional work you do as a consultant, right? You know, the Excel-based analysis, benchmarking, coming up with concepts, and then implementation. But I would say over recent years we have invested a lot into software capabilities and also workflow tools. And I think it depends a little bit on the type of banking. So on the retail banking side, there, for example, we look into, so a lot of banks are investing into software that helps them to, for example, manage deposit portfolios or also loan portfolios, right? That then imagine that the software solution helps the product manager to analyze, for example, flow of funds. So how customers transact within the different accounts and also with other banks, right? To detect, for example, when cannibalization, let's say you launch a new deposit product as a bank, then of course you want to acquire new funds, but you don't want funds just switching all the times within the bank, right? Otherwise it's then from a P&L point of view not ideal. And I think this is an area where I see also Asian banks, focusing more and more in the future. So managing, let's say, the balance sheet products a bit more professionally. I mean, typically we have ALM considerations. Of course, every bank has that, but a bit more the element of price elasticity, right? To understand that. So I think this is on the retail banking side. But the same is true. You can use for consumer loans. You can also use it for FX, right? That you bring up a bit more rules-based pricing or elasticity-based pricing into that. And for this, you need tools to manage. On the B2B or private banking side, right, where it's more an advisor-led business, there, I think a lot of banks recently focused on these digital workflow tools. So we also have our own solution, and what all these tools actually do is they provide, first of all, transparency to an RM, so that they know exactly, how big is the client, how has the client transacted, including then enforced margins and everything. And then it provides typically when they capture a discount, right, or a recurring pricing instruction that they tell them is an escalation required, and then there's an automated workflow attached to it with all the justifications, audit trails, etc. And then, of course, the downstream implications are that you have a fee repository that you can implement in the core banking system. So you have also less overcharging, etc. You have proper documentation, so that makes life much easier. And I think these two trends, I think a lot of banks in Asia currently are also looking at that, because the time and effort spent on just reviewing discounts is quite substantial. And when you have a digital solution, you can easily cut out 30% of the, let's say, the workflows for high touch products, right? But on the more commoditized, I think you can even avoid 60% or more when you have a proper TOM, including discounts, and that then relieves time, RM burden. And right now it's often by product, right? That you have, let's say, on Monday you get an escalation for equity, on Tuesday for funds for the same portfolio, and a lot is then done in a hoc manner, and that's just not efficient. So I think software will bring in more transparency and also help a lot with efficiency gains.
Now, the standard question when we talk about wealth and private banking is, since 10 years we ask ourselves, will there be a shift from the commission-based pricing more on transaction product level towards a more advisory-led proposition pricing, as we said at the very beginning, you pay for the product or for the service, right? Do you see this actually now happening?
Not to the extent that it should be actually, right? But I think most of the banks in Asia, they have, higher, let's say, penetration ratios on the discretionary side and also on the advisory side. But as you point out correctly, not every bank has the structured advisory mandates. But I think here, I would say there are a lot of banks also simply copy-paste the solution they have in Europe, and that I think doesn't really work so well. Because for customers here, what I mentioned initially, right, bringing over the best from Switzerland, but then you need to localize it, you need to adapt it. And I think that element is still lacking a little bit, right? That then the service levels that they define are also in line with customers' expectations. So, for example, retrocession is an important topic for many banks, right? So in essence, you pay for advice, and that's why I'm more independent and I'm not getting remunerated with trailer fees, funds, and others. But this concept is not really well established here in the market, right? And in Switzerland, of course, it was that time in the media, right? Yeah. And I think here, it's also from a regulatory side, it's probably not the main priority, right? Because that's probably the explanation why it was easier over there. But these services, right? Because in essence, when you charge a recurring fee, you want as a customer recurring services. And I think here maybe the services were not exactly what customers expect. because naturally, right, customers, I feel, are a bit more single line focused, a bit more transactional, and are less, let's say, the buy and hold long term.
Yeah, I mean, again, we discussed it at the beginning, that maybe in a restaurant food is more important than the service, but we start to talk all about experience meanwhile, right? And if you experience something really high-end value and service you never get somewhere else, you might also accept that it's coming at the higher
Absolutely,
price,
but you need to articulate the value. I think that's the missing element often when you talk to a banker, right? So I think it's also one of the important success factors, right? When just one training about negotiation is not enough.
Yeah,
it's really how do they bring the value proposition of the bank to the customer. And here as well, I mean, RMs hop a lot between the banks, right? And I think this is the element that's missing. And then, of course, when they don't have the training that's required to really defend the pricing towards the customer, it's easier just to grant the discount. And in wealth management, right, a lot of the customers are very successful businessmen. They are used to sales, used to negotiation, right, very savvy in their field. And then you have a banker on the other side that's probably not then well equipped to have this conversation.
Yeah, absolutely. And it brings me maybe a bit to the last section of today in terms of course, hyper-personalization. Yeah. If there is a different service quality that you get, because the bank is also using data and AI capabilities, right? Artificial intelligence. So where do you see it going in the next 5 years with AI and new capabilities?
Right now, we have a lot of conversations about AI and pricing, and both in retail banking and in wealth management. I think the topic is big, and almost every bank is currently experimenting a bit with the different use cases. The use cases I see for us as a firm that's deep, a lot of there's a lot of pricing is probably on the retail banking side, something like predictive analysis and also measuring elasticities of customers. And then you use this information to provide personalized or tailored proposal, be it a product or also an individualized rate, right? For example, FX is a topic, deposit rates is a topic, balance transfer, loans, right? All these, let's say, products that are very much, offered as a self-servicing, option to customers. Their AI will play a big role, I think. So on the retail banking side, on the advice side, I think AI can help RMs to come up, so decision support tools, right, to come up to better pricing decisions. So you have the idea of, again, providing maybe benchmarks or recommendations to an RM. What would be the right price for a certain customer? Right? And this information can then be, for example, shown at point of sale, let's say in order manager tools, right? When you do ad hoc pricing, what would be now for a given client and a given ticket size an appropriate pricing. So this element, so I think that these two combinations, and of course you can also leverage the capabilities from the retail banking side, self-service on the wealth side, vice versa. And I think that the big benefit of AI, especially in the business where you have a lot of discounts, it can help to bring in a little bit more structure. It also helps to banks to avoid unfair client treatment, because AI can also help to analyze, for example, pricing anomalies, can detect overcharging. So I think, or risk management, right? You have a lot of controls at the moment. You mentioned initially based on HKMA and MAS regulation. A lot of these manual controls, sampling, everything is done by people today, and that can be fully automated with AI. But, and I think this is the big caveat when we look at pricing, is a sensitive topic. So I think right from the beginning, model governance and also pricing fairness is super important, right? And this cannot be that you implement something and then you think later on about it. because this must be right at the beginning. So how do we ensure fairness? How do we ensure fair client treatment? Because this needs to be inbuilt, and also needs to, I think, in the future also being part of the culture. Because you have new job profiles, right? You have a head of AI, you have a head of AI risk. So I think this will change fundamentally how, banks do pricing in the future. But I think what will never disappear is this human element in private banking, because when you have a lot of wealth, and there are critical decisions, right? You buy a house or something that's expensive and important to the customer, you want to have this human element. And then I think all these AI use cases help actually RMs and salespeople to do a better job. And on the non-advised side, I think there you can really do the value pricing, right? To understand the elasticities, the needs, and it can go very far, right? I think that's only the beginning of what we see right now.
Yeah, and I mean, the world is even more complex, that you're often both a retail as well as a wealth private banking client, and you buy retail and wealth products. And,
absolutely.
I mean, with some of the banks, I will never do any investments anymore, and rather go to an interactive brokers, because I just feel I'm overcharged in terms of the products I buy. And that brings maybe a bit also to the conclusion. I mean, a happy customer is also a loyal customer who stays with you for a long time. And the moment the customer feels he's overpriced, then it's already the wrong direction, right?
Yeah, or underserviced.
Which is not a very good topic.
No. And I think this alignment of servicing and pricing is probably, modern cost to serve, right? Everybody's talking about it, but in essence is which service is also the suitable one for the right customers. And also think in wealth management, you have a lot of inactive customers, right? And that's also this activation element is maybe linked to the fact that the RM is not able to provide the services the clients really need.
Yeah, exactly.
Right.
And some of the RMs are also stronger in some of the products than in others, and they sell you that what they don't want to have. And if they have the right AI tools, of course, can also do a better job.
And also, I think one element where also what can be interesting to think about is RM customer matching. I mean, imagine you walk into a bank; it's rather random which RM you get in the end. Right, and I think also here over time, I think this, when you pay a lot for the services, you also want the right person, right?
Absolutely.
And this is a highly individualized decision in the end.
Very interesting. I know we could probably talk for hours.
Pleasure. Happy to come back
great
again.
To have you. Where can the people find you?
Please connect me via LinkedIn. I think that's the easiest way to reach out to me. Otherwise, also on the website, Simon-Kucher.com.
I think you are well known in the market already, as whenever it's about pricing, segmentation, service levels, I think that's where they will talk about you, where we also collaborate. It's been great in the past, so thank you so much.
Thank you, Salomon, for having me.
So that's today's podcast, Pulse Check podcast. Please like and subscribe, and looking forward to continue the conversation next time.
All right. Thanks a lot.
Thank you, Silvio.